So it doesn't let me view it. What's the error message that you're getting? So right here, it'll say, so unless you left the program, well, the duration is 30 days. So I think this is the time that you had to view the program, but you should still be able to go back and look at the recordings for all the different days. And of course, make sure you guys finish the final exam, but you have to go through the steps first. So, all right. Good morning, everybody. Good morning. Good morning. Good morning. Let's run it. Welcome back. January 22nd, day 22 of the year. Isn't it crazy how time flies like that? Ask yourself, how much have you done in the past 22 days to move your life forward? I want to talk to you guys about something before we get started. Number one, this is basically going to replace the Sunday market outlook. So we're going to do fundamentals, obviously live trading, and then maybe go through some Forex news. And I haven't gone through the news yet, so we're going to be able to go through the market news together. What I want to talk about real quick is called continuity. It's a concept of picking up where you left off. So what I like to do is I have processes and systems for all the different responsibilities in my life. When you guys know the concept of like switching hats, like first you put on your, if you're a family person, you have a family hat, and you take it out. Now you have your manager's hat at work. Then you have your, good friend, supportive friend hat when your friend calls you and needs something from you. Continuity allows you to have a framework or a process to get back in the game and pick up where you left off. And when it comes to trading, that's really important. People are often distracted by their daily life. Then they come back to trading and they want to have the same results, but they're not in the same mind state. So what you have to do is, in order to have a solid process to shift from one activity to the next, and then to go to trading, and then to be able to do it in a good way so that you're not kind of like half-assing trading or doing it on autopilot, is set a list of priorities. So when you're trading, first off, trading is an individualized sport because we might all have the same strategy, but we don't all struggle with the same things. So if you personally struggle with over trading, over leveraging, and I can assume that the majority of people watching this that are traders might struggle with getting a little too excited on Mondays and Sundays. So you dig yourself a hole into the week. We've all been there. So whatever your priority is, whether it's managing risk, because that's an issue that you always deal with, whether it's closing trades early, whether it's holding trades, set your list of priorities and remind yourself of those before you start the activity. So before you start trading, remind yourself, what are my number one priorities for the week? Right now, my priority is not to catch a trade or to make money. I found with myself that I do get a little bit too, I don't want to say excited, but it's just like I'm ready to go and I'm fired up. Monday comes around and markets are open. I start looking for opportunities. So I am a little bit too quick to jump the gun in the trading week. Tuesday, Wednesday, Thursday, usually I make the most money. So I should save my ammo for the highest paying days. And Fridays, I used to give my money back. And so my big priority is to not give the money back at the end of the week. I've set my list of priorities here that are individual, but that have also, they're going to keep me out of just looking for the next trade and the next trade and the next trade. Instead, I have a very clearly defined outline of what I'm doing, what I'm looking for, when to walk away. And now I'm not just here for the sake of it. I have a very clear and deliberate plan that I'm following. Make sense? Okay, cool. Continuity, picking up where you left off. Easiest way to do that is to make sure that you have your list of priorities for the activity that you're performing. No error message, nothing pops up or loads. I'm gonna try again. Yeah, see if you just log out, log back in, that might help. Okay. Last night I sent out a markup for NASDAQ, and we're following that markup pretty clearly. Let me just show you guys this real quick. So we're going to cover the Forex news. We're going to go to Forex Factory, see what news events are coming out, and then we'll just check general market news, see what's going on. I've been keeping up with the geopolitical stuff, but it's kind of at a stalemate. Russia-Ukraine peace treaty is kind of up in the air. Right now, there's not a lot of escalation in the Middle East specifically, but over in the Red Sea, still unresolved. and now we're talking about involvement of U.S. troops. So that could be an escalation of the conflict. This is what we saw yesterday. Asia session was forming. The Asia session range it had already established a low, but we didn't really know where the high was. I was expecting a fake up during London and then a push down pre-New York. So you guys just remember, pre-session consolidation, fake up in London, and a breakdown pre-New York. And that's exactly what we're seeing now. So we had the Asia session range get formed. We got a fake up in London, and then now we have the push down pre-New York. So what I'm personally looking for is buys around the lows of Asia session, the Asia session low, 17,350. Looking to take longs there. That's about it. See how long that took? All right. Also, I've decided I'm doing a skilled funded traders challenge. I'm going to be purchasing this today, and I'm going to start this challenge tomorrow or whenever the next opportunity presents itself. Because a lot of people want to start a challenge based on their own schedule, and it makes a lot more sense is to wait for the market to present a high probability trade idea. So you can start your challenge on a good note. Okay, what's up, everybody? YouTube, I see you guys. Steve, good morning. Autobahn, good morning. Clifco, Vincent, Kunal, Stip, good to see you guys. Good morning. All right, I'm heading over to Forex Factory. So today, Bank of Japan's policy decision. Japan news is always tentative, meaning it's like it'll happen at some point in the day. But I'm not a big, I don't really follow Bank of Japan policy that closely, so I don't really know when the tentative times usually are. They haven't changed. This is excess balances, interest rates levied on excess current account balances. Okay, so they haven't changed any rate policy since last year and even longer. I don't expect any changes out of the Bank of Japan as of right now. They've been on a policy of monetary easing for a long time. They don't have a lot of economic activity, and so they're trying to stimulate activity through putting out more money and then making it very cheap to borrow to try to incentivize people to start business activities and do commercial lending. So that's not going to change. We have the Richmond manufacturing tomorrow, not this. I'll actually be looking out for the press conference. I'm really looking for USD news since I trade NASDAQ. That's really the most important thing for me. Okay, so we have the advanced GDP. GDP usually released in multiple parts. Advanced GDP is an estimate. And so this is just going to tell us economic growth. So you guys know GDP is the size of an economy. It's the easiest way to think about it. You're either expanding as an economy or you're contracting. Expanding means your economy is getting bigger. Contracting means your economy is getting smaller. This is important for the Fed right now because it's hard for inflation to come down when GDP is growing. When GDP is growing, it means people are still spending. It means the job market is healthy, and it means prices are usually still stable. So you're not going to have a lot of a big drop in inflation as long as GDP is high and as long as the employment numbers are positive. Shannon said Autobahn is me. There's no way, Shannon, that's you. That's crazy. How did I just learn this? That's actually kind of nuts. I also learned that now he's not even in the chat yet. Say what's up. Good morning, everybody. First day on the funded account. Can't wait to pay for coaching with my first payout and get back on the winning team. Yuri, best of luck. If it's a live funded account, just remember this is the first step to every funded account is prioritize risk management. And I'm not talking about per trade. I'm talking about everybody wants to make money on the account, of course. Your first priority should be don't lose the account. And then from there, start to inch forward and then make some advancements towards profitability. Most people just skip that step, say, okay, forget the protecting the account. Let me go for making the money part. And in order to make money, you have to put money at risk. And that's where a lot of people end up losing it. So stay consistent. prioritize risk management, and I know you're going to be here for the long term. All right, we have core PCE index. This is good. So as you guys know, next week on the 31st, we have the first annual Federal Reserve Press Conference and rate decision. They're going to be talking about their outlook for 2024, which is very important to set the tone from now until the March Fed meeting. We're not expecting any rate cuts during the January meeting, and we're honestly expecting a bit more of a negative tone from the Fed. So I think the market is pushing right now in anticipation. And then when the news comes out next week, we're going to have a little bit of a retracement and then eventually continue bullish. It depends on how aggressive Jerome Powell gets, but all the signs are pointing to a bullish stock market and an easier monetary policy in 2024. So that's going to be next week. GDP and PCE are very important data points to play into what we believe the Fed is going to say next week. PCE is a inflation measure that the Fed uses. It's more accurate than CPI. And core just basically means it's just excluding certain services or goods that usually skew the data. And so that would be food and energy, which are the two. It's food, energy, and housing are the three biggest components of the budget. But because energy prices, gas prices change so much, and because food prices also change so much, they kind of mess with the data. And so to smooth those out, to get a more accurate number of household goods, consumer goods, what are they called? I'm talking about things like your toothpaste, things like cleaning products. Those are usually a little bit more stable. And so we're going to be able to get a gauge about whether consumer goods are more expensive or less expensive. And as you guys can see, they're positive, or they're expected to come out positive. They're expected to come out positive, meaning that that there's still growth in inflation. Like we're still not going backwards. Prices are not coming down. Just the rate that they're going up is slowing. And that's not necessarily a good thing, but we'll see if the Fed has it under control. I'm starting to think that there's a chance the Fed actually pulls this off, where we get inflation down and prices start to come down without having to crash the economy. And I think that this is like crazy. Jerome Powell would become the greatest Fed chairman that's ever lived if that happens. All right. Kunal says gold ideas. I'll cover gold here in a sec. Good morning. Let's get it. Roy, do you prefer funding accounts to then fund personal accounts? Well, before the FTMO situation where they stopped accepting US clients, I didn't think like that at all. I came from funding my own accounts, and to be honest, at this point, I'm not inclined to use any of the offshore brokers. So there's not a lot for me to gain out of funding a personal account. I explained this last time, but if you take, let's take this skilled funded challenge right here. How did the price? Oh, let's take this challenge right here. $839 or $840. So if I get a 200K account. So guys, by the way, this thing might not come down to the Asia session lows. This might be the retest right here of these lows. And this could actually be the push. So if the market does not come back down to these lows right here, to the low of Asia session, but instead continues to push right from the London session lows, then all I'm going to do is just wait for a pullback and buy it at those London lows once it comes back for a retest. Just to let you guys know exactly what I'm looking for here. Okay. First day of the new week, let's crush some high probability trades. If anyone held that Friday trade they caught, one hell of a move. Read. Let me just tell you guys, the trades from last week were crazy. Absolutely crazy. I closed out of the US 30 trade, but and I closed out of the NASDAQ trade from Friday, but I was still holding runners because the swap fees on FTMO are so cheap. So you can hold runners and really not incur massive fees. But I'm still holding these from last week on NASDAQ. This is the daily chart. Talk about daily, we caught this daily wick right here. Then caught this daily wick right here. Insane. All right, so let's get to this example real quick. So if I spend $840 to get a 200K account, you can see that the maximum overall loss is 8%. So that's the amount that I can lose without blowing the account. So I really have 8% of this, which is $16,000. If I fund a live account with $840, I have $840. Okay, so if I want to make $1,600, is it easier for me to just make 1% on this account and make $2,000, or to double this account and make 100% returns? Which one is more possible for you guys? Put option one if getting a 200K account and just doing 1% makes more sense, or if funding a live account with $840 and then doing 100% returns makes more sense. And with the 1% here, you just request the profit split and you still have the whole account. Over here, if you double the account, you have 1,600. You can't withdraw the 1,600. You still have to keep your original balance in the account. So you'd actually have to do 200% to be able to have profits. All right. So if you think about it, using the prop firms, at least right now, just makes the most sense. Now, they have a lot of figuring out to do. They got a lot of rules to kind of navigate. And I'll be honest, I wish them the best of luck because I think that they're a massive benefit to the trading industry. I just really hope that they get it together because, I want to see them prosper for the long term. And I want to see traders being able to take advantage of these opportunities. So prop firms for now. At the end of the day, if I take money out of the markets, the last thing I'm doing is putting it back into a Forex account. NPL FX as 1% makes more sense, plus it ain't your money. Exactly. Yeah, it's not even close. To me, it just makes sense. Also, the goal is to extract money from the Forex market and then go put it into unrelated assets that'll work for you passively. So I'm just going to give you guys some rough examples. This is not financial advice. This is for educational purposes only. Please do your own research and consult a licensed financial professional if you have any questions about your personal financial circumstances. But for the sake of this example, this is the FX market. The way I think about it is I want to extract money from the FX market, and then let's say we have fixed income right here. These are bonds. You can buy government bonds, right? You can go to Treasury Direct, and you can buy bonds directly from the US Treasury. Okay? You can buy Treasury bonds, and then let's see the rates. Treasury rates 2024. Okay, so you can get a 5% rate on a 3-month bond. First off, that's crazy because that's guaranteed money. That's actually nuts. Guaranteed 5% is literally insane. Inflation's about 3.2%. So really your return is going to be a guaranteed 2%. But we won't talk about real versus nominal. This is take money out the FX market. Let's say you put it in fixed income at 5%. So 5% a year means if you have $10,000 invested, that's $500. If you have 100,000 invested, that's $5,000. If you have $1 million invested, 50,000. Okay. Now these are not the best returns, but if you put $10,000 into fixed income, you're making $500 a year for literally for doing nothing. You can, if you have 100 grand in there, you're making 5 grand a year for nothing. If you have $1 million in there, you're making 50 grand a year for guaranteed money, guaranteed by the US government for not doing a thing. Now, this is just one example, and this is a low return, but like low risk option, which is the fixed income securities, like government bonds or just high, there's really, really high credibility corporate bonds too. But that's really the goal is I don't want to keep having to trade for money. Eventually, you want to put the money into places that work for you. Have an allocation to fixed income, have an allocation to real estate. Real estate will pay you monthly or quarterly or however you take your distributions. There's other investments like stocks, which will yield you more than 5%, but they also have higher risk. So my goal is to build a portfolio outside of trading and to use my trading money to invest in that. Now, up until now, what I've done is I've been investing in crypto and I've been reinvesting into chart addicts and reinvesting into the trading industry via the FX Summit. It's a very expensive project. And so up until now, that's how I've been looking at things. But 2025, I'm expecting a massive bull run in crypto. And so right now I'm in an accumulation phase where all the coins that I know have value, but nobody really cares about. People have put them off to the side. Everyone's focused on Bitcoin. I want to be buying up some of those small coins right about now. Okay, let's go around the horn real quick and just take a look at a bunch of other opportunities. This is an idea that I had last night before I delete this for US 30. By the way, we caught the low of the market on US 30. Let's just be completely honest here. This was an insane trade. I ended up closing the runner, but this was just one of the best trades I've caught in a long time. Great start to the year. So you guys know that in a trending market, the market goes through periods of impulses, which are typically moves in the direction of the overall trend, and then periods of reaccumulation or periods of consolidation where the market is just picking up gas before it continues its trip. Over here, we had a massive reaccumulation phase where the market was just picking up liquidity. Price cannot drive higher until there's enough liquidity in the market for it to move. So if there's, let's say an institution has a $10 billion buy order, that order cannot get executed unless there is a sufficient amount of selling pressure on the other side to fill this trade. So there needs to be demand for that, or there needs to be supply for that demand. So long story short, it'll consolidate however long it needs to in order to pick up that steam. Once that steam is picked up, it'll continue its overall direction. Now that we're back bullish, my idea was that we're going to have this extension, pullback, and continuation. When the market is very aggressive, it may not make a larger time frame retest. It might just keep going the same way it did here. You'll see once it broke out of this consolidation range, you had these minor areas of 30-minute and 1-hour structure, but really it was a pretty straight line up. It wasn't until we formed this floor and started this slow trajectory here that we ended up slowing down. So what that means is the market has pushed out of this range. We could have these periods of consolidation along the way, but I don't expect this thing to make a really big retest based on how it's moving already. So then we go down to the smaller time frames and we look for a smaller time frame opportunity. Here are the lows of the range. So I'd like to see a pullback around 37,900. So wherever, it's still early in the game. It's only 5 minutes after market open, so there's no rush on taking any trades. I want to see the market pull back to the lows of London to around 37,900, and then there's going to be potential long opportunities from here. If the market closes below the 37,900 zone with solid candles, I'm not talking about wicks, but solid candles, then that's very likely to come back down for a deeper retest. But until this line breaks, that's the area I'm looking at for longs. I want to see a pullback to these lows. Make sense? This is the visual right here. You guys see this area of structure right here? This is where I want to make sure that my stops are below, because the market can come down and clear liquidity in this area and then bounce up. I want to make sure that you're looking left and using the historical data to place your stops. Beautiful. Would you prefer to try the GOAT funded trader also in case you're trying out funded accounts? No. What is the downside to just using a regulated broker like Forex.com? 1 to 50 is still enough leverage to make money. Sean, I completely understand that. So the thing is, if I was trading Forex, I have no issue using Oanda, because I really don't need that much leverage, I'll be honest. Leverage is a double-edged sword for sure. But it's when I'm trading indices that I'll have to go with a futures broker, and those fees are insane. The tax structure is different. The leverage is different. The execution similar, but I don't know. To be honest, I've just been trading CFDs for so long that I just got to go try it. As a trader, we have to be adaptable, and I know that I'm one of the most adaptable people. I trust my ability to adapt, and so whatever I have to move to, whether it's a futures broker, whether it's a futures prop firm, I know I can adapt, because when you learn how markets work and you learn a strategy that's consistent, you can trade it on no matter what platform. And I'll let you guys know that you can get a direct API through a broker, which is the most direct way to trade. Direct API, Forex, liquidity. So if you have a relationship with one of these companies, REST API, no, it sounds like they're trying to sell some, but long story short, you can directly trade through the broker without having to go, or directly trade with a liquidity provider as opposed to having to go through a broker. This is what I'm looking into now to see if I can just skip the line and go straight to the liquidity. Okay, and I don't know how much you need to have in the account, but I don't think it's that much. I think it's something like just setting up the account and making sure that you have the technology for it, but request access to the API from our customer service team, connect directly to the desktop, and automate your trading strategies. Okay, we'll see. I'll be able to tap more into this, but I think that that's the future. Is honestly, there's going to be so many of these platforms that are making it attractive to trade, and I just think that this game is getting very messy. It's only getting messier and messier. In India, FTMO isn't allowed, so it's really sad to select a good broker. Kunal, stop with the sad emojis. You're a trader, my friend. Do some research. All right. You guys have Google, ChatGPT, whatever it is. Go on all the review websites, read real people's reviews, go on Reddits and Discords with people in there, and don't risk your money unless you've done your research on these platforms. Trust me, this is not a game where you want to rush into the first thing that you see. This is a game where it makes sense to wait. It makes sense to hold off until you have all the information and then make a good decision. Safe to say USD JPY is on an absolute tear. No pullbacks yet. We'll get on that. My zones are very accurate. All right, let's take a look at the DXY. The magnet indicator does not lie. The 103.701 zone, the 103.701 zone got hit perfectly. And when I say perfectly, I mean you literally cannot make this up. When I say I'm accurate, guys. Come on. Come on now. That's accuracy. All right. Next target. So I'm seeing a little bit of a pullback on the DXY, and then the next target will be 105.6 right here. So a pullback probably down to about 101. So if you guys are trading Euro USD and GBP USD, you'll start to notice that pullback this week or maybe next week. And then I expect a continuation of that trajectory. He said, bro, gold, please. All right, man, relax. It's next on the list. Okay. Appreciate the patience here. Retracement on NAS maybe for longs. There's no maybe. Guys, we already covered NASDAQ like 5 minutes ago. Everybody acting like Dory from Finding Nemo. What are we doing here, people? We just covered this. It's coming down for a retest so we can buy. To Roy, my sound might be off. No, sir. I was deep in thought, as any genius would be. All right. And I'm trying to tap into this market so I can figure out exactly what's going on. All right. Just letting you guys know. Sometimes you just have to cut out. This is what I keep trying to tell people is you have to cut out noise to be sharp in this game. Right now, I'm looking at all these little details that people would be missing to try and really, see if I have, like right now I was drawing the fib from either the body, or the wick. And what I have to do is just align the fib, the retracement with all the different levels. So the 61, I ended up figuring out that this is one of the best ways to draw it. The 61 getting respected all the way through. The 38. Negative 27 extension got hit. The 38, not really a big zone for gold. The 50% is getting rejected now. Long story short, here's exactly what I'm looking at. He said, get that attitude. He said, get that attitude right, homie. Or what? Or what? What are you gonna do about it? This guy's crazy. Nuts. All right. So now that that buffoonery is done, the 78.6 is sitting right here. This is the play. Yeah, cut out the noise, people. I deleted all my social medias. If I post something, it's going to be specifically on the desktop. Yeah, I mean, bro, people on Twitter always talking about, bro, check yourself. Like, bro, or what? Bro, this is crazy. This is a free public YouTube stream. I'm gonna let you guys know this at any given moment, just so nobody feels like they're being oppressed by me in any way, shape, or form. If at any given moment you guys find this stream insufferable, or you no longer find value in the stream, instead of sitting there vocalizing your disdain for the stream, you guys know what you could do, right? Grab the phone, click. Oh, turn off the app. Wow, fucking rocket science. All right, my bad. I digress. Back to the point. Gold buys at 1998. Okay, it's the year that some of you guys were born. Some of these people trolling, right? That's why they're acting like this. 1998 buys on gold. That's what I see. I don't know if it'll make it all the way down there, but I would like to see that. I would like to see that before the push. Okay. What do you think about the garment coins? CBDCs, garment coins? Garment? You mean go? I don't know. It's an old habit of still going to YouTube first. Shannon, you're with us now, brother. You're one of us. He said the world has gone soft. I don't think so. I think a lot of people say that. A lot of people are like, oh, this generation this, and the world's gone this. No, I don't think the world is soft. The world is just confused and overstimulated. Now we got to realize how much shit there is out there. That's why I tell people, like, the social media has become very destructive for oh, this could be it. To all my NASDAQ traders out there, if you've taken the master class, do you guys notice? I always just want to point this out every single morning until it clicks. There's a phase here, and there's another phase, and there's another phase, and I just want to see this. Okay, now because we've already had phase 2, if we close back above this support right here, we close back above, it's going to go retest and push from here. I would very much like it to come down and retest these lows, though. Just seen your boy Bob Elliott on Bloomberg Live. Oh, yeah. That's the boy. Oh, there he is. Big Bob. In case you guys know, Bob Elliott was the head of Ray Dalio's personal investment team. He was top analyst and an investor at Bridgewater and Associates, the #1 hedge fund in the world. He spoke at the FX Summit in 2023, and he also was featured on our podcast several times. Very good friend of the show, and will be speaking in Dubai for FX Summit 2024. Great guy.
Enjoy yourself there in New Hampshire on the road, the whole Bloomberg political team, Katie Lyons. My guests this morning are Bob Elliott and Greg Peters. Gentlemen, you've been through a cycle or two, perhaps more than me. It's my first American election. You're veterans. So with that in mind...
Let me know, can you guys hear the audio? Can you guys hear the audio from the YouTube or not?
We are seeing this field narrow quite aggressively, quite early. What did you learn from 2016?
Audio good?
You now reflect and you go, this is how I'm looking at this.
Okay, perfect. Bob, so Big Bob on Bloomberg Live this morning.
Important thing, lessons from both 2016 and 2020 is that what ultimately happens on election day, is less certain than I think many would hope for. And so in that sense, I think, most folks from a markets perspective should be looking at this and ensuring that they're not overweight one particular candidate's success versus another as they navigate through this, what will inevitably be a very volatile political story over the course of the year. I think the thing that's probably interesting here relative to where we were a couple of cycles ago is that the parties are more aligned when it comes to their fiscal policy in aggregate than maybe they have been in the past. Seeing fiscal expansion pressures from both sides of the aisle here through the course of the last, say, 4 years. And it's really going to be a question of what does that composition look like? Is the fiscal expansionary policy going to look more tilted towards lower income cohorts getting transfer payments, or is it going to look more like tax benefits for corporations and higher income individuals? That's really the mix. It's less about the overall spending profile and more about the mix from a policy perspective.
It's about, where does the benefit come down? And I suppose, Greg, I was reflecting back to 2016. We've got a lovely article on the Bloomberg Terminal this morning which talks about, what happened then. And perhaps we'll have a less volatile reaction now. 10 billion went out of bond markets, the biggest since the taper tantrum of 2013. But when you look back at 2016 and 2020, is it too early? Is it too early to have a little bit of a hedge in there?
I think it is too early, and I think the response will be different as well. If you go back to the 2016, I think what took the bond market by surprise was the deficit expansion. So I don't think that'll be a surprise this time. I think both parties are aligned, so to speak. The contours will be different, but I think deficits are here to stay. But I actually think if there is a change in leadership, it'll be a much more violent reaction this time around than what we've seen before, as I think Europe in particular is preparing for such a change. And if you look at a lot of the policies, a lot of those policies could get rolled back, and I think that'll be quite meaningful. And if you look at just one aspect, the change in the labor market could be quite important, as we've seen a real expansion in labor here in the U.S., foreign labor in particular, and a much tighter immigration policy could really roll that back and have a real effect on inflation. So I think it's different.
Briefly, before I go back to Bob, can I just, deficits are here to stay, but will they be tolerated ad nauseum by the bond market? The Brits find out that doesn't always happen. Briefly?
I think so. It's always tricky. It doesn't matter till it matters. I don't.
That's the most economist answer I've ever heard.
I think it will be a lingering concern.
Okay.
It doesn't matter until it matters. Is that we'll cross that bridge when we get there.
Thinking about thinking about
That's
markets
insane.
as we close out in this New Hampshire. We've got a lot to be bullish about, but what are you most concerned about?
Well, I think the main question is whether we get a reacceleration in inflationary pressures. We're really in this sort of perfect.
By the way, my job at the FX Summit is going to be to moderate this conversation between smart-ass people and very successful investors like Bob, and then to be able to translate this back to English for everybody, which I'm going to do here in just a second. But expect conversations like this at the FX Summit, especially because it's going to be right after the next election. And understanding the 2025 implications are going to be very crucial. Having a team of 3 top economists on stage to have a long form discussion about what's going to happen, like what's really going on, I think it's going to be a huge, huge deal at FX Summit 2024. So I'm looking forward to hosting that.
Things like falling gas prices, falling auto prices, the decline in durable goods prices. Those all have to persist. Those declines in prices have to continue in order to continue to get PCE inflation at this level.
Okay.
If they don't, they just moderate. We could easily see PCE pop up in the later half of the year.
Gentlemen, thank you very much. Bob Elliott, Greg Peters there with the very latest on the markets coming up. The morning calls and State Street's Laurie Heinel joins me with her views for 2024 on Bloomberg.
All right, good stuff. That wasn't, I didn't really gain a lot from the other guy, but from Bob, my big takeaways are the market is still healthy. And so at this point, it's hard for the Fed to make any aggressive actions. And I think, okay, look, their specialty is in the bond markets, which is one of my weakest points because I think that bonds are so boring. I never really took the time to understand the implications, but now I'm starting to get more in, kind of involved in the bond market just to see the bonds are some of the first things to react to Fed policy, and they give a lot of indication as to what's going to come next because they are a forward-looking asset. It's like people buy them in anticipation of what's going to happen in 3, 6 months. By the way, guys, I saw two candles closed above the London range right here. And then we've already had a wick through the bottom. And so if price stays at this zone, it could just push from here. Personally, I need to see a little bit more of a pullback because if you think about this as the range, this being Australia and then, or this being the start of the Asia range, and then this being the high, we're kind of smack in the middle. And even though we've already had an expansion above the Asia highs and then we have an expansion below the London lows, we've already technically met all the criteria needed for the move. I would still like to see a bit of a deeper retest. And that's the thing about looking for high probability trades. It's, yes, this is a good trade idea, but is it the best? Is it at a great location? Not really. And so there's better opportunities out there for me. And so I have no issue missing this move, not even close. Loving the energy. Little Iano FX, good to have you on the stream. Good to have all of you guys on the stream. And Supreme Jedi, thanks for the heads up that Bob was on Bloomberg. I appreciate that. Big Joker says this live is a blessing. Thanks, my brother. Big Joker, do me a favor. Go to your settings and go change your name. All right. Nobody's going to be calling themselves Big Joker. You got to respect yourself at all costs. Hopefully, this 30-minute candle can close lower and head towards that entry. Reed, I'm going to tell you the same way that my brain tells me every time I trade. Hope is not a strategy, my friend. Have a clearly defined idea of what you are looking for. Okay? So for me, the way I build my trade ideas is scenario building, and I do an if-then scenario. So I do an if and then scenario. So you guys can use this trick in your, it's not even a trick, but this is like a strategy or a framework that you can use. If the market does X and price reacts in X way, I will do Y. All right, there's something going on here. Here we go. Wrap the text. Okay, so this is how I build multiple scenarios. Good morning, Melissa. Good morning, William. Good morning, seven-figure mission. Seven-figure mission. All right. If the market does X and price reacts in X way, I will do Y. Now, why is that different than what most traders do? Most traders are telling you this will happen. Price will touch this zone. Price will get here. If any trader speaks in absolutes, they have no idea what they're talking about. There are no certainties in markets. There's only probabilities. So a probability means I don't know that the market is going to make it to the zone. I don't have these lines drawn here as like a prediction that the market will come down here. But if the market comes down here and price rejects this zone, then I will do Y. I forgot the word then in here. So that way, when you get to a scenario where the market has a break or bounce, or there's two things that can happen, it can either make a shallow retracement or it can come down for a deeper retracement, and you're struggling to figure out which one, what most traders will do is just pick the immediate one. Okay, well, Roy said it could bounce from here, but it could also bounce from here. I'm just going to enter because price is here and I don't want to wait for a better entry. So the reason that having a clearly defined outline is important is because when you know what you're waiting for, it makes it easier to wait. When you don't know what you're waiting for, you're gonna jump in on some random opportunities. That's the whole point. So if the market comes down here and rejects, then I will buy. If the market breaks above and hits this target, then I'll wait for a pullback. And if the market pulls back and it rejects the London lows again, then I will re-enter at this price. So I already know what I will do, but I don't know what the market will do. This is a conversation we had last week about controllables, focusing on what you can and can't control, especially when it comes to trading. When it comes to trading, we control our position sizing and we control the entry that we get. We also control the trade management, how long to hold. How fast it moves and how aggressive it is, that's up to the market. We did not know the market was going to be this aggressive each time. If I did, I would have, you know? If you knew which ones were going to be the biggest bangers, you would size accordingly. I sized the same exact way as I normally do, but the market decided to get generous and not a single red candle last Friday for that trade. Said Roy's psychology is goated, not gonna lie. Kay, weren't you just talking shit earlier? Did I win you over already? It ain't even been 20 minutes. Is that a new record? All right, good morning. I'm new. When is the FX Summit? Tip Hennenberg. The FX Summit is November 15th to the 17th in Dubai, the heart of the new financial district. It's going to be at the World Trade Center in Dubai, November 15th to the 17th, end of this year. We're going to be bringing on tons of economists, tons of investors, tons of traders. I want to see Umar out there. I do want to see Michael from ICT out there at the summit this year. Raja, Swaggy, Q, the whole squad. It's going to be a very, very packed event. We're expecting around 5,000 people to come to this year's FX Summit, which will make us official. Right now, we're the largest retail trading conference in the world. After 2024, when we break this 5,000 number in Dubai, we will be the largest, not just the retail trading conference, but we will be the largest trading conference in the world officially. Isn't that crazy? Bro, I'm in here every morning. Just damn, I hopped in late. All right. Peace. Can we do the we're pushing peace? Can we have a truce? We're good. I agree. Hope was wrong word, but on the same page. Fine with missing the trade, but would like to see a retracement deeper or no trade will be taken. Read, I like that. Because the language is important. Because language has a purpose, right? A lot of people are like, bro, it's just a word. Why won't you just say this? Why won't you just... Words have meaning. We associate our perspective on reality based on the words that we use, right? That's why there's something called a denotation, which is the dictionary definition of a word, and a connotation, which is like this, like the social understanding of that word, right? So when you bring in superstition into trading, what happens is when you're in an indecisive state, you either have a chance to go logical or you have a chance to go lean on superstition and kind of go with what feels good or like a gut instinct or something else. So when I'm trading and I'm like, damn, I really hope this candle breaks. That phrase is reaffirming a belief in me that markets respond to some kind of like woo-woo, like magic, right? Versus an if-then scenario. When you tell yourself, man, I really hope price comes back to my entry. It might not. It probably won't. God, I really hope price hits TP. What if it doesn't? Right? We don't know. So make decisions based off the fact that you don't know what's going to happen next. And even better, Mark Douglas said this, you don't need to know what happens next to make money. You just need to have a good enough edge, which will basically give you a better chance of winning than losing under these circumstances with on a consistent basis. So not just one time, oh, sometimes the pennant works, sometimes this wedge breakout works. No, an edge works most times when you have these same variables, you get a predictable outcome. Okay. Let me know what are you guys seeing on your side? Is there any news that you guys are seeing floating around that you think is important to markets? Because I've been really trying to distance myself from being involved in the day-to-day like news releases and things like that. Number one, markets don't give a shit about the individual news release. It's kind of more of there's an initial reaction that's usually the opposite of whatever the news is. And then the news plays into the big picture of how markets work or what's happening in the economy, and we're able to study that. So I'm trying my best not to like keep up to date with every news event, but instead just go back later and just look at the record and
I'm
just
well, yourself.
this happened and this happened.
It's Monday.
Yeah, it is, Jamil. All right, so we are getting that retracement down to the entry price. You're good, bro. You're good. You're good. You're good. Bank of Japan rate coming out soon. Big for who trades JPY pairs. 7-figure mission. You're right. Oh, it already came out. No change. Oh, wait. No, never mind. How do you know what time it's going to drop? Is it on the Bank of Japan's website or what? Let's check. The summary of opinions is 8:50 a.m. Huh. Why is that a valid entry price for you? Because on my charts, I marked it out because there's an IPA gap on my chart, but not on yours. I'm on 8 cap though. MMJ? Okay. I have no idea what any of these words mean. An IPA gap sounds like I don't know what that is. But this is a valid point on my chart because of magic, my friend. No, all jokes. This is part of my strategy. I look at different sessions and I use the session times and the session ranges to be able to find effective zones to trade from. So I'm not trading blind. Instead, I have a predetermined structure that I can follow that the market has already established from the previous 2 sessions. That way, I'm not going into each trading session blind, trying to find direction or trying to find structure. Instead, I can always rely on the preceding market sessions. All right, we're getting a second wick below the London low and then a closure back above. So this thing might actually continue. But again, this is just a speculation because I don't know, which is why I'm not in a trade. I'm either going to wait for the pop up or wait for this push down. But for me, as the market is building candles, I also like to test myself a bit, which is, and you'll realize this is the worst game to play, which is guess the next candle. If you if you try to play the game of, okay, this next candle is going to go up, or this next, actually, matter of fact, let's play this game together because this is what I do in my head when I'm trading, is this kind of keeps me occupied, where I just play what direction is the next candle going to go. So put a 1 if you guys think that this candle is going to close bearish. Put a 2 if you think that this candle is going to close bullish. Now, we're already, 10 minutes into the candle, already formed a bottom wick and a top wick. But there's still another 20 minutes left in this 30-minute candle. So put a 1 if you guys think that this will close bullish. Put a 2 if you guys think that this candle right now will close bearish. And what you'll realize is your accuracy with that is no matter how good you are, and even the best traders that I know, it's 50, 60%. And that's being generous. So that's why candle by candle trading is such a trap, and structure and having an edge, which is a multi confirmation system, is so much more effective. So I'm seeing a lot of people saying bullish, or sorry, a lot of people saying bearish. 2 is bearish, 1 is bullish. 1, bullish, 2, bearish. All right, everybody's saying bearish, except for a few folks. We got Kunal saying bullish. We got Bad Habit saying bullish, bullish. And Lou Word says bullish. Ramsey says bullish. Afro Podcast says bullish. A lot of other folks are saying bearish. Let's check the Chart Addicts chat. This one is going to be a little bit more accurate. Mike says bullish. Mike, me and you on the same page. David says bearish. Chris says bearish. Mike says bearish. Bianca bearish. Mohammed bearish. Sandra bearish. Noah bearish. Bearish. I have no idea. Could turn around at any time. Day trader? Who's day trader in the chat? Who is this? All right. Hey, don't go changing y'all's votes, man. This is as the candle's forming. You guys are out here changing your votes. Chill. Oh, Ken. Okay, Ken. Good stuff. That was the correct answer, by the way. That was the right answer for the day. It says we don't have the Chart Addicts members. Look at Ken's response. Now, just for the sake of the game, though, I appreciate everybody's insight, but let's see who wins because it's 50-50 right now. All right, so that's why do not do candle by candle trading. Even the most skilled traders in here will get it wrong. So instead, look at structure, look at discounts, look at good prices to enter in a bullish market, areas of support in a bullish market, and then just trade structure and direction. Blue Soft says, I want to buy. Brother, I want to be on a boat in the south of France. What are we talking about wants for? You know what I'm saying? What are we talking about wants for? Matter of fact, let me ask you an even better question, Blue. So this is what my brain asked me. Does the market care about what I want? Answer is no. The market cares about what the market cares about, which is grabbing liquidity from retail so they can execute orders and move the market. That's what the market cares about. Guys, the mindset, like I'm telling you, language matters. The conversation you have with yourself is going to feed an understanding or a belief about the markets that's going to lead you to be in a state of just emotional response. So if you tell yourself, I hope, or I want, or this is the worst one, by the way. When this one starts to play into your head, walk away. When it says, I need. Whenever you hear I need, you're operating from desperation. You're not operating from a logical set of systems. And that's where you should walk away. I need price to break this zone. Bro, I just need price to hit TP2. I just need to pass this challenge. Bro, I just need price to break back above this level. As soon as you need something, you're telling your body you need this. What you need is food, water, shelter, and God, right? Everything else is a plus. Everything else is a I would like to see, or there's a high probability of, or if the market does, then I will, right? Whenever you say, I need this trade to play out, you are now attaching your outcome, your survival instincts on whatever the market decides to do, which is random. I need price to go up. What if it doesn't? Like, oh, I need water. What if you don't have it? Then you die. Oh, I need price to go up. What if it doesn't? Well, I don't know. I feel like I'm going to die. Like, I don't know. You're telling yourself that this is a need now. And that's why language is so important. The conversation you have with yourself while you're trading is the most important conversation. The most important work you'll do as a trader is the work when nobody's watching, when no one's around, when it's just you and the MetaTrader, and you have choices to make. And so that conversation keeps you in line, keeps you in a perfect performance state so that you're operating from a logical set of systems, a logical set of frameworks, as opposed to an emotional reaction that the market is trying to drive out of you. Just got to wait until the candle closes. Exactly. Which is another 20 minutes. Patience. I know it's bad when I start praying. Rather, when you start praying, there are some prayers that work. Like if you're a religious person, there are prayers that make sense as a trader, but here's the right way to do it and here's the wrong way to do it. I'm praying for the market to do something. The market's going to do whatever it wants. All right, so cut that out. God is not here to help you with that. You're going to sit there and just be like, this guy's an idiot. So you pray for strength, you pray for clarity, you pray for understanding, you pray for patience, or you really pray for emotional calm, you pray for peace, and you really just have that sort of like, it's a meditative technique and a reaffirmation technique to put yourself in the right mental state. As long as you're praying for things that are in your control, it's going to help you because it's a positive conversation to be having. A negative conversation to have is praying for the market to do something, because then what happens? The market's going to do something random and not what you wanted. What are you going to do? Be like, God, you did this, right? What? No. God did not make you enter 25 trades. You suck. All right? Don't blame God for this. Roy, thank you for the free knowledge. Got to run. Have a good day, y'all. Right back at you. Alexandru, crush it today. You already know it's 22 days in the year. Make them count. We're building momentum this year, people. Momentum comes from consistency. Momentum comes from, it's 22 days in, people starting to slow down. We are not. I'm just getting warmed up. So make sure you guys stay consistent and keep building that momentum all 2024. Another important thing when live trading is that the longer you're on the charts, the worse your decision making gets. So when I'm fresh right now, I'm still fresh. I got another hour left in me before I even hit that wall. But at some point, even I know, and being on a stream also exhausts that decision making a lot sooner because I'm being very active here. But at the same time, understand your own limit, which is at what point is there a diminishing effect on your decisions? So a diminishing effect means as I'm on the charts, my decision making is actually getting better because I'm getting more sharp, I'm getting more data, the candles are closing, and I'm seeing the information in real time. So I'm able to gauge, I'm able to have a better decision making for the first probably 30 minutes to an hour and a half that I'm on the charts. After that point, my decision making starts to go downhill very quickly. And so there's a breaking point here where if you overstay your welcome on the charts, I have a rule, which is don't overstay your welcome. This is where all the bad decisions, this is where the blown accounts, this is where the over trading, this is where I'm supposed to walk away and I entered more trades because ain't nothing good's going to happen here. As an executive, as a CEO, I have a set number of good decisions or important high-level decisions I can make a day. After that, there's a diminishing effect on those good decisions as well. And so I have after 5 p.m., I really try not to make consequential decisions for chart addicts or for anything important. But before 5 p.m., I'm in the sharpest state to make a decision that I know I can stick by. And so just know where that point is. If you don't have a set time to walk away, that'll be the first thing to add to your trading plan, which is not just how much do I risk on a trade and what is my confirmation criteria to enter, but what time do I have to be off because that's where all bad decisions happen. It's like the club. I'm out. I'm out before 1. Nothing good happens after 1 a.m. Right? Ain't nobody in there, right? This is not the hour for life-changing decisions, or not positive life-changing decisions at 1. So you got to know when to call it a quits. Okay, what's the probability of NAS doing a deep pullback? Good question. So the way that and again, I'm not trying to predict here, but what I do is I try to list different probabilities for these different scenarios. So right now, the most likely scenario A, which is the market comes down to 17,350 and comes up. This one, I'm actually giving a pretty high chance, about a 50% chance, maybe even higher. Let's go 60. For the market to just form support and then push up, I'd give that about 20. And then for the market to do a deep pullback, I give that about 20. There's not a lot of confirmations to be honest, there's more confirmations for the market just flying up. So I would actually give that one 25%. I'd give that one about 25%, and I'd give the deep retracement about 15%, only because we don't have any confirmations yet. Now, if the market comes down here and closes below the zone, option B just goes out the window. So then it's between option A and then option C. Okay, option C means it's going to go bearish and flip. If we have a solid candle closure, I would give that one a higher probability, 60%. If it has a wick below the zone and a closure back above this level, then I would give option A 60% and I'd give option C 40%. So these are rough probabilities. I'm kind of just playing this in my head. And I just want to understand which opportunity is the best and highest probability opportunity. That's how I'm going to determine which trade I want to take. Because I could take the buys now and I could take the sells, but both of those are not as high probability, in my opinion, as waiting for that shallow pullback. Does that make sense? Put a 1 in the chat if that makes sense. Guys, I know I'm kind of going all over the place today. We're doing kind of high level probability. We're talking about if-then scenario building. We're talking about data, really understanding data. But I really want to make sure that I'm still explaining this in a way that it's getting through. It's not supposed to be like an econ class or some shit. This is supposed to be useful information. All right, Triadics members are active. Are we going to have a NAS100 link up at the summit? Yes. If anybody was oh yeah, by the way, 2 big kind of housekeeping announcements. Number 1, if you guys are a Chart Addicts VIP member, if you guys have done any of the coaching, or if you've done a NAS100 master class, we will be doing a private meetup at the FX Summit. Another thing, if you guys are interested in coming to the summit and you've done the master class or the coaching, please reach out to us to see if there's any discounts or if there's any opportunities for you specifically for upgrades or something like that. Because we are looking out for everybody who is part of the Chart Addicts community. And last but not least, we've gotten an outrageous amount of messages asking to open the group chat back up. Now, I was serious last year when I said that we're trying to make it an environment, we're trying to make the group chat and the community an environment where only the most serious traders come. And we're going to stick to the fact that if you took one of the classes or did the coaching, you'll have an opportunity to stay in the group chats. Obviously, there's going to be a fee associated because we're going to be doing the daily outlook calls. We're going to be doing market outlooks at 7 p.m. after New York closes. We're going to have the education sessions. And as part of your membership, you get free access to every masterclass that we do every month, which I think is incredible. So if you guys are interested in that, put something in the chats and let us know if that's something that you guys would be interested in. The only way to get access to the group chat is to have gone through one of the programs first. So yes, it's technically open, or it'll be open, but it's not open. You still have to be competent as a trader, and you still have to understand what you're doing so we can have a productive dialogue in the group chat. Cool. We'll be doing a 1 month and then maybe an annual sort of plan. And then we'll be doing a ton of cool things for members out there in Dubai. So I really hope to see a lot of you guys in the group chat, getting interactive with us and doing some of those more in-depth calls, because these streams are good. But when we can have a more in-depth conversation, people are sending in their charts, we're having that back and forth, the level of growth is insane. And I want to give a shout out to everybody in the Chart Addicts group chat, because I've seen the conversations elevate insanely in the past 2 months. And now I get into the group chat some days and I see you guys calling out the trade before I do. I see you guys having better entries than I do. I see you guys kind of helping each other out and giving each other good pointers every once in a while. Not in like you're in a group chat with a bunch of random people and everyone's got an opinion, but from a perspective of competence and from a perspective of everyone's interests are aligned. We're all trying to grow. We're all trying to learn this strategy. We're all trying to be the best traders. And so I really want to applaud everybody in the Chart Addicts VIP chat for really bringing that energy out. That's what we're looking for. And shout out to that leadership that you guys are showing. 16,800 to 17,000 will be the next destination. Okay, well, I beat you to it, my friend. Oh, you said 17,000. Oh, you're talking about deep retracement. Nah, we'll see. If we look at certain lagging indicators, we were pretty overbought. Let's be honest. But now that we've come down meaningfully and we've already had a little bit of a cool off here, right? I think there's a chance that the market can continue like without a massive retracement on the higher time frames. I think the market does have enough bullish interest to keep pumping. Roy, when you see price respecting that level of resistance, why don't you take the short down to where you plan on taking the long? So bad habits, that's hilarious that your name is bad habits because that was one of my worst habits. That's actually, there's nobody better that could have asked the question except for a person whose name on YouTube is bad habits. So typically what people do is, instead of being patient and exercising self-control by waiting for a high probability trade, they'll try to take a counter trend trade in the middle in order to, and look, as part of my strategy, you can take shorts at the higher level. I used to do both. I used to take longs on the retest. I used to take shorts up here. And then if there was an extension, I'd take here. And then I would take the re-entry right here. So after the market touches this, it's going to clear back above the support. I would take a re-entry here. And then after it clears, it comes back for one more test. And I would take another re-entry. And you can do this. However, one of my 10 rules for trading NASDAQ that I cover in the master class is only trade in the direction of the trend. The trades that are in the direction are always going to pay a lot more. So I'll give you an example. A lot of folks try to short this right here. All right. We've already had a ton of short opportunities at this zone. They tried to short it. Going long paid us way more. I'm still in these buys in the runners. These paid out way more. Let's take a look at the last session. We're at this area of consolidation. And the market hit this kind of like inverted or this kind of head and shoulders movement, hit the top of the range, retested, and there could have been some short opportunities here. Taking the buys, that is going to yield you a much bigger opportunity. So you can make consistent money with a counter trend strategy as long as you know when to get out. So yes, I can take the shorts, but the market is still bullish and the longs are going to be that big opportunity. So that's what I'd rather wait for. Bro, come to daily live. What are you talking about? Bad habits, did that answer your question? It gets exhausting as he just explained. It's not exhausting and I want to tell you guys, we put out a lot of great information, but you want to use the stuff that's relevant to you. Your job is not to learn every single thing you can. It feels like that when you're new to a skill. What I want to urge you guys is stick to something very simple and then use the information online to your advantage. So at any given point, if this stream starts to distract you from your own bias, I don't know if I would recommend turning it off because I do feel like I have a much better, like, look, I get better entries than most of y'all. Except for the Chart Addicts members. You guys sauce me on a daily. But I get better entries than most people. And so if you are trading this and you're starting to get unsure, you might have a better chance of sticking on this stream than not, if I'll be real. However, if at any point the stream or the group chats or the content or the YouTube or anything gets in the way of your trading or gets in the way of your decision making or your confidence or being sure about a trade that you're in, get out. And use these tools to your advantage. I think that's why a lot of people get so emotionally attached to things on social media. It's because they're relying on this stuff as their own. I don't know how to describe it. Like you're not using these tools. You're letting these tools use you. Your phone is a tool in your pocket. Most people are the phone has a leash on them. You know, and I was in this, and this year I made it a mission to delete these apps I'm spending the most time on. I went to that analytics page. I saw the apps I was spending the most time on, which was reading audiobooks and keeping up with news and stuff on YouTube, of all places. So I deleted YouTube off my phone. And then it went to Twitter, right? X, because there was so much news on there. There's always stimulus. There's always something. I'll be on a break in between two meetings. 15 minutes doesn't really seem like a lot of time to get something done. So instead I pull out the phone and just check some updates or whatever. That is the most useless shit I've ever seen in my life. It's useless, like absolutely useless. So This year I'm cutting back heavily. We're hiring social media management teams to just basically, like, I still want to create awesome content to help traders be like a reminder. I'm not trying to post fucking memes and dumb shit. What I want to do is when you're scrolling, I want to be the guy that's telling you to get off social media. I want to have the post that's like, hey, dickhead, stop scrolling, right? I want to be the person that will send you a little nudge on social media to remind you to follow your rules. Because sometimes it's all we need, right? You're sitting there in a trade, you're like, I really hope it does, and I hope it doesn't, and I hope it should, and I hope it can't. And then you just see a tweet that's like, you can't control anything outside of you. Focus on you and the outcome. Like, focus on you, and it will play, like, everything will work itself out. And you just get that reminder. You're like, damn, I can't control the market. I can only control myself. You get right back down to earth. So I want to create great content, but we're going to have teams managing this stuff. And I recommend that you guys use social media for what you need it for, whether it be connections, inspiration, posting your story, keeping up with friends, but then get off after that because these apps are getting better and better at just keeping people on there. Cool. All right, we're getting that push down. So I told you guys there's two scenarios now. There's this scenario, which, by the way, actually, I have to adjust my entry here. Oh, yeah, guys, I'm going to enter my first position here. 1.27 R&R. Okay. So I'm going to enter this trade without a clear rejection because risk and reward. And I just want to do this real quick. If I wait for a rejection, my risk and reward is 2.5 to 1. If I enter now, my risk and reward is 3.6 to 1. On the daily, this thing looks like it's coming down pretty heavy. Okay. This is 50 points risk. So from the FTMO price, it's 345, which will be about 290. And that's way too high of a risk. All right, I reduced the size just to 0.5%, just because if the market pushes down just a little bit more, like it's doing right now, I want to be able to enter a much better position here. So yeah, just to show you guys, the risk and reward of waiting for the rejection, 2.6, of entering right at the zone, 3.5, and then right now getting an extended entry is about a 5 to 1. So I know that we haven't seen a rejection from the market just yet. And again, it's not guaranteed. But the reason I would enter that first position, which is a tester for me, the reason I would enter that first position is because of the risk and reward. Knowing that I have a high probability of getting this rejection I'm looking for, and that if I wait, I'm going to miss my chance because my TP1 is right here. So if I'm waiting for a rejection, I'm going to miss my shot. Make sense? I'm going to enter one more position here. Those entries are a little bit too close, but it's okay. I'll set a hard TP on one of them and then leave the other one open. So this is about a 2 to 1. Risking 500 to make about 930. The second trade is about a 3 to 1. Risking 360 to make about 1,000. But I'm going to leave the better of those two entries with not an open TP, but I'm going to put this thing pretty far away. Then hold this thing through. Beautiful rejection. So at this point, what I can do is close the worst of the two entries and just hold the better one. But I'm going to wait until that TP1 gets hit. Okay. Shout out your entries if you guys do take it. Ain't that martingale you just did? Kind of, but not really. Martingale involves a lot more scaling. So it's just like, and it involves a doubling of the risk each time. So it's like you'll risk 500 here, then you'll risk 1,000 here, and then you'll risk 2,000 down here. I already knew what my overall risk was going to be, which was 1% max on all positions. So I split up the risk 500 and 350. And so I'm risking about 850 on both. So I'm not leveraging higher to try to double the money. I am keeping the same exact risk. All right, let's see some of these entries from the Chart Addicts chat. We have, damn, bro. So we got Chris at 348. Ooh, James got 344. James, is that the best entry? Might just be. Chris Brown said, you got 740 and 750. Okay, Bobby got the best entry, of course. 338. Bobby, bro, I remember we had a conversation. You told me whenever the market gets to entry, you wait for it to go into drawdown before entering. Bro, the way you explained that was so clutch because I've been using that explanation for a little bit, and I think that's the best way to break it down. Great point. Noah got 352. Janae got 343 in the running. DB got 334. You're going to have to prove that one. You're going to have to prove that one. Bianca got 341. 338? Hell no. Who got DB? You got 334. You're going to have to prove that. That's craziness. No way everybody getting better entries than me. He said, okay, 361. Shan got 361. Mo got 358. Luke got 343. Damn, everybody's in this trade? Good morning. What's TP? Fed Forex. This is the rule about these streams, is I try my best to answer all questions. However, when it comes to just giving out free money, I encourage people to do two things. Number one, you're either going to learn the strategy for yourself so you can answer that question for yourself, or if you don't know the strategy and you're here on these streams, you're going to have to wait for me to explain or call it. Okay? Because, I mean, most people can see what my targets are along the way, but I try my best to, like, if you don't know what you're doing, don't worry about it. Just follow the lead, and you know, you'll see here in a second. C4 got 340. That's nice. Diego Saloon got 353. Fed Forex got 350. Peter Asomani Jr. got 340. NASDAQ has crossed below the 200 EMA. Oh, hold on. Has it really? On what time frame? No way. Huh. Would you look at that? Wait, what happened to it? All right, let's go with a 4-hour EMA. Brother, does that look like it's breaking below to you? Come on. I mean, we are long overdue for a pullback, people. We broke all-time highs on Friday. And typically after long time all-time highs, we typically have some kind of pullback, but the trend is your friend until it ends. You guys can take that quote to the bank with you. The trend is your friend until it ends. Spot crude tests breaking up. Why don't I have US oil on here anymore? I look at WTI. I don't really look at anything else. But I did call for a massive rise in oil prices, and it looks like I am the goat of goats. Look at this. Already respecting that support. Let me just go ahead and put this out so that people can't be like, oh, you called it later. Like, no. We're very far away from $93 a barrel. Very, very far. We're about a half a world war away. All right. God forbid. But I'm out here. I called the dollar play. This play. I don't even trade WTI. I just buy gas at the gas stations. All right, let's stay on NASDAQ here, just so we can manage this trade effectively. This is the 1 minute chart, by the way. If you guys want to see 1 minute entries. All right. This is why if you look at the markets, or if you look at the chart on a higher time frame, and you're using the right techniques and you're finding the right structure, you can get a 1 minute accurate entry with like a nice push, but using using higher time frame structure. This, watching it on the higher time frame, allows me to have more patience, because if I'm looking at the 1 minute, I'm like, oh, that was a bullish candle. Now it's time to close. Oh, now it's retracing. It's coming back down. Time for me to close it. You can't play that game. So instead, when you move up to the higher time frame, it allows you to have more patience, to be like, bro, we've barely moved. The candle hasn't even pushed off of the zone yet. It's still sitting right at that same price, right? Like we're not in the clear here by any stretch of the imagination. So higher time frames to keep you grounded. Ken says, Roy, he says, love it. Already in profits. Roy, brother, your strategy rocks. Thank you, Ken. I appreciate that. But let's not celebrate too soon here. Right? Usually the trades we celebrate early on are the ones that'll do something unexpected. Let's have some patience. Let's understand what could happen. What could happen is, even if the market's going to go our way, we could still dip through and grab liquidity. That's real. That's a possibility. There's a chance that the market does not hit that TP1, instead comes very close and then reverses. That's possible. There's a chance the market just keeps playing around this zone and then fills to the downside. That is possible. And so because of the endless probabilities in this market, I try not to celebrate until, well, I just really try not to celebrate it, at all. But sometimes it's hard because I'm on the live stream and this is a stressful experience. I know that I play things very calm on here, and I know, and I don't know, calm is the right word. I'm off my rocker sometimes. But I know that I really am, like, I really do try my best to be this sharp on these streams. But it is a massive tension and relief exercise, where it is a little bit tense when I'm in this trade, because I have to keep myself accountable. And then I also imagine all these eyes looking at you while you're in a trade. It's tough. And you have money on the line, and you have your reputation on the line, and it's a fucking trade. So it is a high stress activity to start with. That's why you guys will catch me celebrating sometimes, not because I won, but because of the relief of, like, that was a close call, because the market really was playing with us for a little bit. So I hope to give out that context, that if you see me celebrating, I'm genuinely not celebrating, making money or winning the trade, but more so that I'm celebrating sticking to my guns. I'm celebrating taking action at that price, even though it was not clear at the time. And so that's what you can celebrate. Celebrate the things that you did right. Not winning the trade, but following your plan. I'm not looking or talking about this trade. I'm talking about the 100 trades that I've taken and the hundreds of trades that I have backtested. Yeah, Ken. And then the hundreds of trades that you will take in the future, my boy. Because when you're testing out this strategy, there's a period of understanding sizing, of knowing when to re-enter and when to really just, kind of pull away. But once you get it down and you get the sizing right, and you get the mindset right, and you get your schedule down, dude, this has completely changed my life, because it takes so much less energy. It's like, there's only it's making trading binary. Someone said that earlier. There's only two things that can happen. Right now, I know I mentioned endless probabilities, but really a lot of those are like 5%, 10% probability paths for price. The highest probability ones are either a breakthrough and it keeps going, or a push up in some way, shape, or form. Says, you're a king, Roy. I'm not a king. Price is king. I'm just out here. I'm a fool. I'm an unbelievably incredible trader. I give credit to the dyslexia for the wins. I take responsibility for the L's. You feel me? What's your reasoning for taking it past the current highs? I usually target the current highs? Well, my friend, if it's a bullish market, what is the, and let me let Tony answer this one. What's the definition of a bullish trend? So if you were to like look at the dictionary definition of a bullish trend, it would be what? Higher what? I know there's a lag on YouTube, so I'm gonna give him a second. But the definition of a bullish trend would be what, Tony? Because Tony is asking, in case you guys missed it, why am I targeting past the previous highs? Because that's usually the target. And it's a great question. Okay, it's not just new highs and new lows. The real definition is higher highs and higher lows. Meaning, if this is the low of Australia session, and this is our new higher high, as long as price maintains a higher floor, then the trend is still intact. So the bullish trend is still valid. So that means that the next thing that should happen is a higher high. And so if this is the previous high, by definition, if we're trading in the direction of the trend, the market should break the previous high and create a new one. So in a trending market, I usually target above the previous highs. In a ranging market, I typically target the previous highs. Make sense? All right, this is going to be a patience exercise. I do have to get off here in about 15, 20 minutes. So that should be enough time for us to see price play out and ideally get the start of that new hourly candle, which will probably just push down first, or sorry, hopefully push up, and it's not hopefully. We'll see what happens. What I would like to see is the market to push up first and then come down and grab liquidity and then make this move. If we have a solid candle closure, there's 13 minutes left in this hour candle. If we have a solid candle closure below the low, I would have to see price rebound first above this candle. So we'd have to close above and engulf it. And then I would have to see a pullback through this low. And I would buy it as close to that floor as possible, as close to 350 as possible. So there is some drawdown right here, just so you guys can see. And I'm risking pretty close to that 1%. And so I don't want to enter another position. But if I had saved a little bit more ammo, I would have entered another position right here for the wick back above. Oh, by the way, let's see how that candle closed. A lot of people said bearish on that candle right here. It ended up closing bullish for that poll earlier. Remember we did ones and twos in the chat if it's bullish or bearish. So if you guys said bullish, congratulations. If you guys said bearish, that did not play out, but the next candle was bearish. So it might not be the specific candle that you're looking at, but maybe the next candle might be the one to push down. I'm doing some quick maths here. 316. That's 900. I have $100 of risk left. And I was really thinking about putting an entry here just to hedge some of that. So if it wicks back up, I can hedge some of that risk out. But I'm just going to hold these trades the way they are. Win or lose, you accept the risk before you enter the trade. So the reason I said we don't celebrate too soon is that I already accepted the risk of this trade before I entered it. And before it finishes playing out, anything can happen. So if you start celebrating, you're going to be disappointed if it doesn't go your way. I guess we're due for a retracement here. It's just the way the market goes. Be patient. There's still 11 minutes left in the hour. Let's see if we have a solid body closure. So like I said, if the candle has a solid body closure below the Australia session lows, then there's a good chance that we continue to the downside for this deep retracement, which will very likely bring us all the way back down to 17,100. But personally, I always want to give price a chance to wick and a chance to close back above support before I write it off. And so that's where I'm going to be patient. Oh, look how close this thing got to the stop loss. Wow. I'm going to give this thing a little bit of room. That was a little bit too close. Wow. How many brokers will let that happen? Yeah, I'm really looking forward to starting these new challenges. The whole FTMO thing, banning US clients kind of got me bummed out because I had a lot of big plans this year. I want to hit supreme rank on FTMO and some of these other personal goals. Excuse me. But as long as other firms are taking US clients, I don't really care where the money comes from. As long as they're in business, as long as they'll accept US clients, and as long as they won't kind of like BS on the KYC just to stop me from getting a payout, I think we're gonna have a very fruitful relationship with a lot of these new firms. All right, I've said it about 4 times, and at this point, there's no hesitation. There's no room for hesitation left. I am going to enter one more position here. And I'll show you guys why. The bottom position is slightly larger than the other two. As we approach these two positions, I don't have to wait for them to be in profit to close them. I can even close them at a minor loss because this trade will be floating in profits. You guys can see right now, these trades are floating about, this one's $200 negative. This one is another $200 negative. All right, so about $400. When this trade reaches about halfway or a little bit higher, these are going to be floating about -60 or -100, whatever it might be. This one will be floating 200 in profits. They'll cancel each other out. What I can do is close out those early two entries at break even, and then move my stop loss to break even on this bottom entry and protect the trade. So let me just show you guys in real time here. This trade is now floating $120, the 12 lot. These 10 lots are now floating -90 and -120. You guys see? So even if I thought the market was going to go bearish and I just wanted to jump out now, I could cancel out at least one of these losses, eat like $140 loss or whatever it might be, and then be able to walk away with like a 0.1 or 0.2% loss for the day. Now, because the market is still in this indecisive stage where it has not rejected yet, I want to give it a chance to play out. I'm confident in my strategy. But what I used to do is just, if I was panicking out of a trade, I would just close them both and then just get on the sidelines until I was clear-headed enough to make the next best decision. As we approach higher, you guys can see now the position is -80. But the bottom position is now floating. Well, now it just retraced, but it was at 120 or 140. So it's starting to overtake that first position. All right, a little bit of patience here. We'll be able to get I'm very confident we'll get a closure in break even on these first two, and then be in pretty good profits on this bottom position. Possible US 30 buy coming shortly. For US 30, I do want to see a deep pullback. I would like to see a price at least come down here to these lows, but ideally I wanted to see it come down to 37,900. This one I'd be more patient with. Then again, I haven't traded US 30 in a long, the first US 30 trade I took was on this live stream last week. The first trade in like probably 6-7 months. Okay, we're pretty close here. Just as an update, a live update here. Now that position is floating -$40, but the bottom position is floating 160. So you could cancel that out and close half of this trade and still be in profits. Okay, so this is a way to, even if you get the wrong trade or the wrong position, there are still opportunities to hedge out as long as you understand price, you understand discounts, and you have a framework to understanding the markets. A lot of people sold right here. They're selling here. Okay, So if you don't understand how markets work, you're going to be on the other side of the market every time. And that's why learning the strategy is so crucial. Almost there. $6 minutes until the hour candle closes. I am actually going to de-risk the top position here. Now, I'm very confident that we can get that break even. Looking at this on the smaller time, I'm confident we can get that break even, but I'm not making this choice to find out. I'm making this choice to de-risk. So this is not about maximizing profits. Instead, this is about minimizing risk. So I'm going to wait for one more push back up. So when you make a risk management decision, your brain's going to start to convince you, hey, don't close it. It's going your way like it is right now. You're like, hey, don't close those top positions. It's going your way now. Now you should just hold it and just milk all the profits. But I first had the idea to close because of risk management and psychology, not to maximize my profits. And so just because it's going my way now doesn't mean that I'm like clear-minded and I'm ready to take on risk or whatever. Because the whole point of being in drawdown was messing with my ability to see the trade, was the whole reason why I wanted to de-risk. And so if I made that choice in that state, I have to stick with it. And so that's the reason I de-risked that top position. Now, normally I would also close half of the bottom one, but I'm going to hold these two instead and just reassess my risk here. And I'm around 0.7% risk on both of these positions now. So I went from 0.8 down to 0.7, and I had a much, much better entry. Instead of two entries at 44, I ended up getting an entry at 24 with a better size. All right. If I was a savage, if this was one of those days, I'd enter another one right now. But I'm not going to, because risk management and being responsible. My strategy, too dangerous, but pays when you know. I got 334 and 341. Those are good. Those are good. I just want to see a pullback right here. Just to like 390, which is about 50, 60 points away from the current price. Accept the risk on your trades, people. Accept the risk. All right, 3 minutes until the hour candle closes. It also pays to wait for the hour candle closure before making a trading decision. Because sometimes you'll have like a 30-minute, 15, 5-minute, whatever it is, kind of moving up and down, going through the zone, not really respecting structure. And then all of a sudden you have like the open of a new candle that really is the push that you're looking for, or you just end up getting a massive wick rejection. So it always pays to wait. So you might not get the outcome you want because that's, volume comes in the market. But if you're already in a trade, you've already accepted the risk, then just, wait for the hour candle. Now, obviously, this only applies to higher time frame trades, like 1 hour, 4-hour trades. If you're in a 5-minute trade, maybe you don't want to wait for the 1 hour candle. Okay. Now let me see if I can provide some value here to traders. While you guys are if anybody's in this trade and you're dealing with a negative emotion, if you wouldn't mind, or if you feel comfortable with this, if you could share whatever the thought process is. So what I try to do in terms of performance coaching when I'm working with traders is to try to identify what is the trigger that causes bad behavior and bad emotional reactions. And then what is the thinking process while you're in this trade? If you don't feel comfortable telling me, just write it down for yourself to review later. What is going through your head right now while sitting in drawdown? What is the exact thought? And if you guys can share it, maybe we can work through it together. The thought could be, get out. I don't want to take a loss. Oh, I've already taken a few losses this week. Maybe I should just close. I took a loss last night and I don't want to make things worse. What is the thought process going in when you are in drawdown? And let's kind of work through this real quick. Robin said, is this the heartbeat? Robin, yes. You can't see it, but there's a tear running down my face. All right. You got phase 1, phase 2, phase 3, potential. Even in a bearish heartbeat, it goes here. That's why even this rejection on the smaller time frames, I'm still anticipating. All right, ladies and gentlemen, we just got something that is overall not the best sign unless you're a seller. We just got a body candle closure below the zone. That's not good. He said, enter the sell side. No, I would never do that. I would enter the sell side at a premium price. If we retested and rejected the premiums, yes. I would not buy below the lows. Or sorry, I would not sell below the lows. But this body candle, this body of the candle that closed below the Australia lows is indicating to me that sellers are going to continue to push. Now, again, I'm not going to be the guy that's like guessing candle by candle, but this is what structure just told us. The market just clearly told us that sellers are willing to take price lower than the Australia range. Okay. So I appreciate some folks that are sharing their thought process here so that we can discuss this. So some of the thought processes while in drawdown, I shouldn't have gotten back in. Did you get back in for a re-entry, Tony? Like the second entry that I got into, or what? Robin said, while on funded accounts, I get scared or want to revenge trading. So scared of what, Robin? William says, I'm nonchalant. That's how how it's supposed to be. As you taught us, the point is to have a great risk strategy to live to come back and trade again. Zen, or I'm sorry, he says Zen. Ken, you're making my day today. Solid answers, solidly paying attention. Chris says, trying to stay focused, heart racing, but keeping my composure till stop loss. So you can't just like have your heart racing and then just pray for the best, right? You have that internal dialogue, guys. This is what trading is for. When they say personal development and all this stuff, what we're really talking about is the ability, while under stress and while in a high stress situation, to have this dialogue with yourself, to ask yourself, what am I worried about? Okay, I'm worried about losing this trade. Why? There are 4 main fears that impact traders, and really it's only ever going to fall in one of these categories. There's the fear of being wrong. There's the fear of losing money. There's the fear of missing out. And there's the fear of leaving money on the table. Okay? So ask yourself, which of these 4 is impacting your trading? If you do 1, 2, 3, and 4. The fear of being wrong. For me, this impacts me a little bit on the streams because I don't take some trades that I would normally take by myself. First off, we didn't get kicked out, did we? Nope, we did not. God, I want to enter a second position so bad. Responsibility. I'm going to be responsible. We're good. I don't need more positions. But the fear of being wrong plays into my mindset because obviously, guys, I'm on a live stream. My reputation is on the line. My money is on the line. My account is on the line. And so, the fear of being wrong definitely plays in. But I have to detach myself from that. And the best way to do that is by acknowledging it. If I don't know what's wrong, I'm just going to be like, oh, I'm just nervous because I'm in a trade. No, dude, I got fucking hundreds and hundreds of eyes and thousands of people will watch this. And the reputation of not just myself, but my strategy, my company, everything is on the line. And so I have to be able to acknowledge that when I make a decision. Is this a trade I'd put my reputation behind it type deal? The fear of losing money. This is real. No one likes to lose money. I don't care who you are. But being able to understand the game and understand my strategy helps me. Because I realize like my strategy is 60, 70% win rate. I'm going to lose 3 out of every 10 trades, right? This could be one of them. It's just the way it is. That's why risk management is a big priority. The fear of missing out. Okay, you missed the last 100 live streams and you're like, you know what? Today's the day I'm finally going to take this trade. I don't care. I'm finally going to take this trade today. And today is the one day that it loses. But so the fear of missing out, you're kind of like I just want to get in, but I don't know. And that feeling is everybody else is going to make money without you. The fear of leaving money on the table. It's like, why do most traders, because after you enter a good trade, then starts the real problem, right? Close or hold, baby. Close or hold, the number one question that traders have to wrestle with. So a lot of people have trouble with the decision of when to close because they don't want to miss out on more money. Be like, yeah, I can close it with $1,000, but if I hold it, it can go to $2,000, $3,000. So these fears are the ones that typically impact traders in a negative way, especially when it comes to emotional reactions and emotional decision making. So if you guys can just think through your trading today alone, just because it's fresh, put out a number of which one of these may have impacted your trading today. And if the answer is none, say none, but don't make this some macho thing where it's like, oh, none of these, like I've been cold as a cucumber. Like, let's be real. I literally do this every single freaking day. And I know my strategy better than anyone else here. So I'm the most confident and the most prepared. And I still feel a sense of pressure when performing a high stress situation like this. He says, Trading in the Zone, a good book. Yep. And I'm pretty sure this is actually from Dr. Alexander Elder from, Trading for a Living. Trading for a Living, I think. But yeah, if you guys have not read Mark Douglas books, by the way, that is the number one thing that I would recommend for everyone to do if you want to learn about your own psychology. Read Trading in the Zone, and then after you've read Trading in the Zone, because that's more of a psychology introspection kind of book, once you have read Trading in the Zone, then read The Disciplined Trader. The Disciplined Trader has to be one of the greatest trading books that's ever been written. All right? And I highly, highly recommend getting both of those. Actually, I met this kid that used to go to high school with me, used to play football together. I met him at a Starbucks randomly, and I told him I was a trader. He told me he read Trading in the Zone. He doesn't even trade. He just did it as like a personal help, kind of self-help thing. And he said it helped him like crazy to understand the motivation behind a lot of the things he was doing. You guys know when you go to a therapist and they convince you everything is your parents' fault? They're like, yeah, your shitty behavior is because this thing happened to you as a kid, and so this is going to be the excuse now for all the shitty behavior. That works in your daily life because you can be like a victim kind of person, but that does not work in trading. This is not for the people who are going to go to blaming other people, right? Trading is a game for the folks who are going to acknowledge the source of the emotional and behavioral trouble, but be able to combat it through habits and systems. Okay, so I know that I close trades early because I grew up in a scarce household financially, and so seeing like a $2,000 is a lot of money to me, and I'm allowing my upbringing and my relationship with money to impact my decision on the charts. Okay, that could be a fact. But now the second side is, who gives a fuck? Okay, yeah, I grew up in that environment. How does that have anything to do with my strategy right now in this present moment? The only thing that matters right now is hold this trade. You guys see how this goes? So you can acknowledge it, be aware of it, and then be able to just get around it by being like, yeah, that doesn't matter. Because staying confident in NAS. But do I sound like I'm worried? Do I sound concerned to you? Have some patience, man. Trust. Big trust. Bulls come in right when I got out. So these moments are hard for me because I want to get back in, but I've already lost twice today. What do you do in these situations? I'm going to be honest, brother. I'm literally in front of you, guiding you through this trade. Literally right in front of your eyes, and you still manage to fuck up. Now, I'm going to say this as plainly as it's going to sound. You got to walk away for the day. Because if somebody's giving you the answers to the test and you still got it wrong, this is not the day. But that's a sign. It's like, all right, why don't you protect the account and live to fight another day? Straight up. And I really don't mean that in any disrespectful way, but it's like, we're literally having a whole conversation about how to deal with holding a trade and how to not panic and how to de-risk and how to have risk management. And like, why would you jump out, bro? It's still sitting right at the entry. You get what I'm saying? It's like there was zero reason to close. So now that you're on the sidelines and the clarity is back in, don't beat yourself up for it. 'Cause that's not the point of this conversation. All right. We're fucking traders. This is not here to be like what you shoulda, coulda. This is a take out a piece of paper and write down exactly what just happened. And Tony, I'm going to be real with you, bro. You can tell me if I'm right or wrong. I don't want to make an assumption here, but you're probably over leveraged, which is why you just jumped out so soon. Am I wrong or am I right? I have a fear of being wrong. I hate seeing red trades on my MT5. Well, Gabe, let's be real. You got to become friends with losing. Not so you can become a loser. I'm not saying like, oh, be happy with losing and shit. No, no, no. But so that you can accept the reality of this game. Accepting the reality of the game is crucial. I thought it was from trading in the zone. It could be trading in the zone. The four fears, maybe I have them mixed up. The best loser is the one who wins. It's like, Gabe, some trades go into drawdown, some trades don't. Some trades go directly to TP and never come back like last week. Some trades don't. Some trades lose. Before you enter a trade, you have to accept that all three of those are possible. That way, when you come back, there's no surprises. You can't be surprised at a red MT4 if you know that that's a reality. You get what I'm saying? And plus, I try not to stare at the screen. Staring at the red MT4 is not fun for anyone. There's also a Mark Douglas psychology workshop that was uploaded. Those are really good. But two-step, I would recommend the books first. Because his seminars, they kind of like they are less concise, straight to the point, and he kind of dances around some of the topics until he gets to the main point. But in the books, he provides the point and then 50 examples until that shit sticks, and then he relates it to trading. And I just feel like it's a much more clear way of understanding the concepts. Blank the Prophet said, the second I had no more fear, win or lose, I like my trade. My PNL started to go up. I love it. He said, respect, Brody. Gurus don't be going live. Blanc, I am not a fucking guru, but I appreciate you. Thank you. But please don't call me a guru. I am not your guru. All right. I'm a man who is an absolute beast at trading because I've committed all of my free time to learning this skill while everybody else was partying, while everybody else was doing giveaways, while everyone's doing prop firm deals and whatnot. I stuck to trading. And that's why I'm so good at what I do. All right, so I'm definitely not a guru. I've just been through the mud. No, I'm not over leveraged. I just have to stop putting my stop loss so tight. I'm guessing that's me being greedy. Well, you wouldn't have a problem putting your stop loss further if you're not over leveraged, bro. Like if you have a 0.01 on the chart, you can put your stop loss further away. If you're risking a penny lot. William Gonzalez said, someone tell Gabe to trade on the computer and you'll see white and black. Ah, that's a good one. You can also change the colors on your MT4 so that they're not, so it's different. And you can also put a black and white feature on your phone so you're not as inclined to react to it. Ladies and gentlemen, look at what patience can do. Look at what patience can do. We're back in profits. And I'm actually going to hold this one to TP1 to reward myself for the patience. The bottom position is running at about $300 now. The top position is back in profits at about $12. I could close this top position and hold the bottom one, which is typically what I would do to be conservative, right? But I'm not really playing for conservative today. Today, I'm going to go to TP1, and I think I made all the right choices up until now. I'm still very clear. I have another hour before my decision-making starts to take a hit, and I'm sticking with this. 4 is the last fear I'm dealing with, but using a daily lot size allotment is helping me. If I lose, I lose honestly. As long as I can justify mechanically why I took the trade, I'm good. Yo, Shin, bro, that was so fucking good, bro. That's what I'm talking about. That's what I'm talking about. Guys, I'm going to say this slowly again. So having a daily lot size limit is helping him. You guys got to realize that is the first and most important thing. Write that down. If I lose honestly. As long as I can justify the trade mechanically, which means that you can go back later or even in the moment and ask yourself, why did I even take this trade again? And then be able to actually have an answer. If you can do that, you're not going to have any regrets about your decisions that day. So as long as you can justify the trade, you're good with the decisions, win or lose. That is trading. That is it. That right there is the bridge between when you are lost in the wind and then when you have actually found your footing in trading. Good shit. That's what I'm talking about. Do you still get the pressure of being funded, getting a big payout, or just prove friends and family in my situation? Look, bro, I had a situation earlier this year that people took out of context. At this point, I realized that just keep your fucking goals to yourself and let the results do the talking. At the end of the day, we don't get into trading to have to deal with other people's opinions. We get into trading because when you get this skill down, it's only you and your results. Now, when I go on social media, I might be insecure about a $2,000 win or a $1,000 win or $700 payout because everybody else is posting some $30,000 marketing account, whatever, right? So if you're going to play the comparison game, you're never going to be happy and you're always going to make shitty decisions. Now, if I asked anybody on this stream, if you made 2,000 a week, would you be happy with trading? And most people on the stream would say yes, unless you're making more, you would say yes, because that would replace most people's income or double it, right? So you don't need to go for these 5%, 6%, whatever is like, dude, if you made $1,200 on an account, on a 100K account, and then you just waited for your payout and post profit split, you made $800 or $900. That $900 will pay for the next challenge. Okay. And so will the refund. So right now, it's just take all the bullshit social media comparison out of it, and you'll realize how much better decisions you'll make. And that's my number one priority focus for 2024 is I'm not here to announce shit for nobody. I will talk my talk because when I go on these other prop firms and I want to make a statement, I will make a statement. But I'm going to pride myself on my performance and my ability to stay consistent this year. I'm not going to sit here and try to show off numbers. Because here's what I realized, guys. Talk to Kyle, talk to some of these other folks. There's always someone that made $1 million in payouts that year. You're never going to win the game of having a big payout or whatever. Ever. If I make 12 grand, I don't need 40K. I'm happy with 12. If I make 5 grand, that's fine. Because my life circumstance is like I put my money and invest it in ways that's extremely intelligent. So I don't need to make 100 grand. These guys are going to blow it on a car. I'm going to put my 12 grand to use. I'm going to be able to leverage it in a way that's, that's valuable. So long story short, no. After this year, I don't feel a single ounce of pressure because I have nothing to prove to anybody. And these live streams are just more to provide an opportunity to folks who can't afford coaching, who can't afford the masterclass, and who can't afford the FX Summit. Take these trades, make your money, come learn how to do this yourself, and let's make 2024 a year to count on. So that's where my mindset is going into this year. GIP said, win or lose, my psychology went up 10 points today. Good stuff. As you was talking about what could probably happen breakdown, it was calming. I needed to learn to do for myself. Thank you. For sure, man. That's what I'm here for. Watching someone do it in real time is the equivalent of like 6 months of seeing before and after screenshots. Like when we all close out of the stream and you're by yourself and now you have to make your decisions, that's where the clock starts. And hopefully when you see me do it and I'm thinking out loud, I can give you a framework for how to approach these different scenarios. So now you're not like close or hold. Well, it could go up and make more money, but I don't want to take a loss. That's like the level 1 conversation you have. When you can override that conversation and say, why would I close if my system says I have a high chance of hitting TP1? Why would I close when the market has not hit stop loss? The whole point of a stop loss is that's where the market's going to reverse. Right? So when you have these dialogues and these like go-tos, you're able to navigate around these markets. Now, ladies and gents, I am going to close this top position because it's getting close to the end of my custom trading session, this 30-minute session. And what I want to do is secure half of my trade. Because for me, I want to have the satisfaction of knowing that I didn't just waste hours in the morning, that I did put in hours this morning, but I was patient enough to at least walk away with money. And so even though it was only, I lost 130 on that first trade. And now I'm up 160. I only made $30 profit, which is horrendous. But at the end of the day, it's still not negative. For me, I want to at least feel like I made the right choices. And that's why taking partial profits works for me. Now what I'm going to do is I'm going to let the remainder of this trade ride. Once we hit TP1, which is 17,400, which is about 30 points away. So if you're watching this on FTMO, this will be 380. You always have to double check the quotes to make sure that you're operating on the same structure. Look at this 4-hour wick entry, guys. Beautiful 4-hour wick entry. If it holds, it'll become just like these other trades that we've been holding on the daily. So leaving a running position is so important. Okay, now just let this thing ride up another 30 points, and then that's where I'll secure another half of my position. So if you guys can think right here, it'll be about 320 bucks. I'll secure another $150 and then let the rest ride up into, into the sunset. Excuse me. Okay, if you're still in the trade, put a 1. If you closed out early because you got scared, put a 2. And I want you guys to be honest. If you can be honest with us, you can be honest with yourself. Okay. Robin, the second book was The Disciplined Trader by Mark Douglas. Tim Tack said, I set a huge stop loss with low leverage, so it lessens my chance of stop loss getting hit. And even if I lose, I don't lose much. Stop over leveraging. Tim, I like that, but putting a large stop loss is cool, but make sure that the risk and reward adds up. So be methodical with your stop loss, because I still like this trade. The second entry is a 4.5 to 1 R&R. Now, the more that I extend my stop loss and get generous, it does mess with my risk and reward. So on the next trade, I need more winning trades to make up for it. You get that? Okay, so again, put a 1 if you held, put a 2 if you closed prematurely because you were uncomfortable with the trade. If I lose because of a bad decision, it hurts. If I do what I'm supposed to and lose, it's fine. I love that, Tim. That's awesome. Bluesoft said, I'm in profit. Good stuff. I appreciate you sharing your knowledge on the live streams. I've learned so much. Thank you. Awesome stuff, Sam, man. If you guys wouldn't mind shouting us up on Instagram too. We seem to only get like a few people tagging us on Instagram. So if you guys just take out your phone and just like take a picture and just be like in profit, or just take a picture of your MT4 with the entry and tag us, that'd be much appreciated. Trust me, guys, it goes a long way. People only seem to want to show up when there's negativity, but when there's positivity and we're winning and we're literally just making hundreds and thousands of dollars together, it kind of seems quiet. And so let's, don't be shy. I know some of you guys are gatekeeping because you don't want people to realize where you're getting all your money from, but hey, don't do that. That's fucked up. All right, don't gatekeep great information. A lot of 1s and a few 2s is what I see. Fire entries, read good stuff. I know you got some fire entries. 3 likes and almost 200 people. Come on. No, we had 60 likes, bro. Chill. 3 likes is crazy. I'm down 4.5 on my funding. I'm currently risking 0.5. I'm confident I'll get it back up, but I'm considering going down at 0.25 until I get back to at least negative 3%. That was just a bunch of random shit, Tony. Stop fucking around with your account, man. And I'll tell you, Tony, I just got back from a negative 8.5% in my funded challenge. The most recent one I started in early January on FTMO before the ban. Dude, I was down 8.5% the day that they announced that this was they were not accepting new challenges from US clients. Now I'm down about 6.5%. Now I'm up about 6.5%. I'm up 6.3%, 6.5% almost. And I'm still floating almost 0.3%. Okay, you can make it back. Don't go changing your risk too much. Okay, if you're risking 0.5%, that means, here's what this means. This trade here is 4.5 to 1, but let's just say that we took profits at the previous high. 2.5 to 1. Meaning if you're risking a 0.5, you'll be making 2.5 times your money, which is 1.5%. If you find 2 of these trades and you do this twice, you're up 3% already. Okay? So just, you know what I'm saying? Just stick to the script, find the best opportunities, and make decisions based on risk and reward. Don't just be like, oh, the market is moving and Roy's in a winning trade. Let me jump in right here. Look at the risk and reward is 2.5 to 1, right? If you wait and you're entering right now because you hesitated and you're entering late, your risk and reward is 1-to-1. You're never going to break out of that hole. You're always going to be win a couple trades, lose a couple trades, win a couple trades, lose a couple trades, and just staying in break even. Waiting, just entering a trade late is not the way to go. Trust me. So find these opportunities that give you a good R&R. Prioritize the risk and reward above just being in a trade, and you'll be able to make your money. Trust. This thing is moving, y'all. Let's look at the 5-minute. Oh, let's look at the 1-minute. Oh, wow. How many minutes of patience did this take, people? And we finally have the volume. This is why it was worth me staying here for a few extra minutes to really see that thing come in. And by the way, guys, in case anybody's thinking that we're just kind of calling these trades out randomly, this was called last night. I really don't want to understate how valuable this is. And by the way, whoever said that the gurus don't do live streams, yeah, none of them, they'll all just post stuff. They got other people calling their signals. But look, this was last night before the session even started, bro. Fake up, fake down, stop playing. This morning, we had the fake up. We're coming in for the fake down. And then now, we had the fake up, we had the fake down, and now we're ready to rock and roll. Yo, this is just crazy. All right? This is just crazy. Chart Addicts members, please put something in the chat if you guys remember this from yesterday, and then let's go ahead and call this a day. What comes next is a retest of this zone, so don't think that we're home free just yet. There is going to be one more pullback. But damn. This was the 30-minute, right? Oh my God. I'm going to do my before and after here. Okay. Here's before. Fake up, fake down, and pump. Here's during. We already had the fake up. Then here's this morning. We had the fake down and a push up. Come on, people. Everybody thinking this is random and all this other random stuff. Oh my God. For a person like me who is so good at not speaking in absolutes, I really might be just, damn it. I was about to say, I was about to get a little cocky. I might be accurate enough to actually speak in absolutes, but I still don't. That's when you know that you really got this dialed in. Come on. 337 entry came in clutch. Thanks, bro. Yo, shout out to everybody that got a great entry. Make sure you guys are securing your partial profits. And what I'm going to do is I actually do have to walk away. So I'm moving my stops to break even. There's now 0 risk on this trade. If you guys set a hard TP at the previous highs, we're pushing really close to that TP1, by the way. We're pushing real close to that TP1. Look at this 4-hour wick, man. Damn. I love this game. All right. I wonder if I'd have the same attitude if I lost. Okay. So look, I could make another $760 on this trade alone with $0 of risk. Now the market is still moving in my direction, and so I'm actually not going to set a hard TP for this one. I'm just going to let this one go. However, I will secure partial profits before I walk away. Might be worth waiting a minute or two. It's okay. Partial profits are booked again. Not a crazy day, made about $130 today. Better than losing. If the market continues to push, then I'll just let it be the runner that does the work for me. So now it's the market's job to do the rest of the work for me. I got my troops out there in the game, and now I get to go along and finish real work, which I'm not looking forward to, which is why I'm, productively procrastinating on the stream. I joined 2 of your live streams last week, and I'm up 10.5% on the funded account. Jesus. Yo, send us a screenshot or tag us, Hugo Chung. Send us a screenshot at info@chartaddictsfx.com or tag us on Instagram if you don't mind. 10.5% on a funded account is crazy. W Hugo. It's got a, it is good. Stick to 1 to 2 when in drawdown. Love it. He said, I joined 2 of the live streams. I'm up 10.5% is a crazy statement. Bro, I'm not even up 10.5% and I'm here every day. Lost all my profits I made this week, but I'm not giving up. I'm going to just build my account back as I keep lots small. I was over risking and I ate my account up. Yeah, over risking and probably over trading, brother. Got to be very selective. But also, dude, I never had a free resource like this stream when I was learning. Why is it so hard for people to just learn from these streams? Guys, I really had to blow my hard-earned money. I'd go work, a double shift at a restaurant. I would be reselling shoes after. I'd be getting robbed in an alleyway for reselling shoes. I would take the money from that sale and go fund an account, blow it all on a few US 30 trades. I did that shit so you don't have to. Why don't you guys, what's the deal? Guys, you know what I'm saying? If I had a resource like this, I would never lose a trade in my fucking life. I'd be on here soaking up game. I'm locking in on coaching this week. Be on the lookout. Jamil, you're running out of time, brother. There's only 11 days in the month. I don't know if it's 3-day coaching, we might be able to swing it. 5-day, Jamil will always make time for you. But February is going to be very busy. So let's make sure if you're looking to get into coaching, it's got to be ASAP. Okay. Quick reminder before I hop off, the NAS100 masterclass. Yes, it's recorded in case you guys can't make the live classes, of course. But head on over to the website link in the description. Go to the live classes tab. You guys can check out real traders giving their honest feedback about the class itself and kind of how straightforward it is. No, what you guys will hear from these is everybody just saying there's no nonsense. It's straight to the point. It's like, here is the info. Here is the strategy. So if you're looking for just something that you can use all 2024 to be like this person, 10.5% up on the funded accounts, this is going to be the way to go by learning a clear and consistent strategy. 3 days of education, 1 day of review and Q&A. Make sure you guys register as soon as possible. Use promo code NAS30 for 30% off. And of course, if you win this trade or if you guys are in this trade, screenshot and send us a picture on Instagram, just to let folks know what they're missing out on. All right, beautiful stuff. Love to see it. Can I email for my Discord access? Yes, email info@chartaddictsfx.com. Again, info@chartaddictsfx.com. You can also find our email at the bottom of our website right here. Just reach out to us and you guys can get whatever you're looking for. All right, everybody, happy and safe trading this week. Take it easy. Make sure you don't give back the profits if you've made them on the stream. And I'll catch you tomorrow bright and early for another New York session market stream. Also, drop a like on your way out, 160 concurrent viewers. Come on now. I'm going to catch you guys tomorrow. Peace. All right, CA members,